Hey, good morning, everyone. This is Steve from Beyond the Trades, and today I'm going to do a short video concerning something that I've been seeing a lot of more inexperienced traders and even some experienced traders struggle with, and that is the idea of buying the dips, or in many cases, individuals actually losing money and some traders actually blowing up because they're trying to get in stocks when they feel are dropping. They can get themselves a very good price for the stock, and then it just keeps dropping down, and they have no logic other than they think or they feel that the stock can't go lower, or the stock is a good company with good financials and a good long-term thesis, and it's at a very good price, yet it keeps trending down in the market that we're in. So the question that's often asked of me is, Steve, you swing trade, and for the record, I'm in no swing trades right now. Is when do you feel getting into a stock is proper? When it starts dropping and it could be at a good price. So my first answer to that is there is no feeling. Right? What I feel or what I think doesn't matter. There's a lot of stocks right now that I think are at bargain prices, but they keep going down. So my feelings mean nothing. The markets don't care about them. And that's a key concept. And I repeat that, it seems so basic, and this is not high level technical analysis, but the markets just don't care what we think. And if a stock's in a downtrend, trends usually continue trending down until they no longer trend down. So we're going to talk about and look at some stocks, how I personally play them. Now, understand, this is how I play them. I'm a trend trader that uses moving averages. I mean, I use all the several other indicators I might look at, but in general, I'm a trend trader that uses moving averages. And for swing trading, I tend to use 4 key moving averages. And if you look on the screen share, and we have United Steel up, the blue is a 200-day moving average. And I believe that the 200-day moving average is used by many. So it's a widely looked at moving average. So that's the blue. The 50-day moving average is also another key daily chart moving average that a lot of traders and probably machines look at, and that is this maroon or mauve color, okay, or pink if you want to call it, trend line. And then I use shorter term moving averages on my daily chart for swing trades. The green would be the 10 EMA, and the orange would be the 10 EMA. So, excuse me, the green is the 20 EMA. Again, the green is the 20 EMA, and the orange is the 10 EMA. Now, on stocks that are dropping or tanking, a key concept to understand that if the market is dropping, if the SPY is dropping, if the Qs for your tech and growth stocks are dropping, 3 out of 4 stocks will move with the market. So if the market is tanking, I don't want to be long. Now, that fourth stock that is going opposite the market is what's called an alpha stock. It's moving on its own, and it's usually moving on its own because it has a very legit, strong catalyst behind it. Okay, earnings that are being viewed on Wall Street is very positive. So I always ask myself, if I want to go long, what is the market doing? And vice versa, especially if I'm day trading. But here we're talking about swing traders. So let's take a look at X. One of the things, if you look at X right now, it's a really good example. All right. X has dropped, right? United Steel has dropped. It's dropped all the way down, and now it's starting to consolidate. All right. A lot of individuals are going to say this is an excellent spot to get an X, because let's look left on the chart. We could see, all right, where it potentially could be bouncing. This could be an excellent opportunity to get at X at $19 when gold was all the way up to $30 back in August. All right. Now, we have to understand what's happening here and put yourself in the shoes. right? The stock is below all four of the key moving averages that I like to look at. And again, we're talking about how I trade, okay? And I've been trading for the past 10 years, past 8 successfully. And how I define paying, successfully is by paying taxes, okay? So it doesn't make my way right, wrong, or indifferent, it's just how I trade, all right? So let's understand that for me, seeing a stock underneath all four of its key moving averages that I like to use, you don't have to use my moving averages. You can use whatever works for you, as long as it works, as long as you understand that it works. All right, so I see it basic. Now, if I was shorting this stock, if I was in X short, and I see it slowing down now and consolidating, what would I do? What would you do if you was short X? Think about that for a second. And now you see it slowing down. What would you do? Right? I know what I'd probably do is I would probably start covering my short. I had a heck of a short, right? I'm in profits. It's slowing down. Why risk? Okay, let me take my money and run. So I cover my short. And if I cover my short, this is going to probably start coming back up a little bit. And you can see here, 2 days ago, it did a little bit. Okay. So if I jump in long, meaning I'm not shorted, right? Thinking that I'm buying on the bottom, what happens when all the other individuals like me who are shorting, right? And if we're covering our short, we're buying, so the stock is going up. Okay. What's going to happen when we're done shorting? If there's no new buyers, if there's no new buyers coming in, or buyers that think they're late to the party, what's going to happen? Okay. The stock's going to drop back down again. This is no new buyers. So if I'm shorting, now I cover, we're all done covering our shorts, the stock go back down again. And that is a common scenario that you see happening in charts. So when do I get in this chart? Now this chart is a little choppy for me, right? You can call it trapped longs up here. I call it congestion, all right? But let's say I did want to go long X. I'd be looking to get long X when it's above at least 2 of its moving averages. Now, I'm not going to enter long any stock that has descending moving averages like this. So if price starts coming up, and after the shorts are done covering, new buyers come in, and it pushes this price up, and these 2 moving averages, the 20 SMA and the 20 EMA and the 10 EMA start trending back up, and price gets above both, then I would consider entering. So hopefully that makes sense. Why don't you go take a look at possibly another stock? All right, here's a good stock, Microsoft. I know it just had earnings. Okay, same thing. We forget the earnings for a second. Microsoft has been going down. It's been a good short. It seems to have found some support at the 200-day moving average. All right. So what happened 2 days ago? I know it had earnings, but let's play out this scenario again. All right, the stock starts moving up. Shorts are getting out. Stock moves back down. Both the 20 and the 10 are descending. Yes, price did break above 2 moving averages, but the moving averages are still descending. So for me, and this is a concept that I use, I do not like to get into a swing trade long unless it's above 2 of my key moving averages and the short-term swing moving averages, the 10 EMA and the 20 EMA, descending upwards. So above 2 moving averages with the moving averages descending upwards. That's what I'm looking for. To me, that's confirmation that a reversal's in place, that it's not just shorts covering, that it's bringing in new buyers. Now, that's a very basic and very simple analogy. Obviously, I will look at the charts to see if there's trapped longs. Obviously, I'll look at the price actions. I'm just giving a basic overview because now individuals, when they ask me, Steve, I want to go long now, I think I'm getting a good price, I'll ask them why. All right. And if they tell me they feel that it's a good price, I'm like, no, what you probably want to look at is what's confirming to you that the reversal's in place. Now, what confirms to me, and again, I'm going to repeat it again, what confirms to me that a reversal's in place, and let's go back to X, is I want to see price above 2 moving averages, all right? And I want to see those moving averages starting to trend upwards. Now, for the case of X, if price does get above the 2 moving averages, which is around $22, by the time it gets there, rest assured those short-term moving averages, the 20 and the 10, probably will be trending up. Right? I'm not saying I would enter it, there's a lot of congestion here, but that to me would confirm that maybe new buyers are coming into this and it's not just short covering. So hopefully that makes sense. Let me see if I can find another good example. Okay, now here's a good example of one that might be ready. AFLAC, okay, AFL, right? Stock was trending up, did pull back, didn't pull back that much considering the pullback we had in the overall market, all right? It fell below its short-term moving averages, but it was still above its 50 and still above the 200. It had a chance to drop all the way down to the 50-day moving average. It did not. I would not be looking to enter it here, but look, it did rebound above both moving averages. So you might say, well, Steve, why don't you enter it now? Remember, if it's above 2 of the key moving averages, we also want to see the 20 EMA and the 10 EMA trending upwards. Notice it is not trending upward yet, okay? But you see both those moving averages starting to curl upwards. So shortly, AFLEC might be a decent swing trade. In fact, you see I already have a price alert, right, set at that level. To me, knowing that it reaches that price level, both the orange, the 10 EMA, and the green 20 EMA will be trending upwards. And then obviously we'll have a test of this recent high, and this could be a nice swing trade. So I don't want to go too long on this video. If anyone has any questions, remember, we discuss this every day at equitiesetc.com trading room, as well as the microefutures.com trading room. And what's really good about this is we'll discuss what we're looking at via the candles, along with JJ, VWAP Trader 1, and what he's seeing on his TPO charts, market profile charts. Often when they're the same, we know that we have a good confirmation in place for a reversal being in place. So that is how we keep members in the room out of trouble. Obviously, we also use All Day Raise, has back-tested trade idea scans that provide us with good setups. So we're looking at strong stocks and we're looking at it from different angles, different eyes, TPO market profile, as well as candlesticks, to make sure these stocks are confirmed that they are not going to continue going back down. And again, in this type of market, 3 out of 4 stocks are going to continue to go down. Right now, a lot of stocks are beaten up. All right. I don't anticipate myself entering any swing trades right away. Okay. You know, I'm going through some charts right now. A lot of stocks are beaten up. You know, you take a look at Draftkings, right? And Draftkings just had an upgrade. Look at it, right? If you were shorting Draftkings all the way down, what are you doing? Right when it starts consolidating, what you're going to do is you're going to cover your short. You're going to take your profits and run. You made enough money moving down. If you do that, it's going to spike the price up a little bit. When all the shorts are done covering, what's going to happen? Price is going to come back down unless there's new buyers, right? So I would not be interested in DraftKings till you see where I set a price alert, this blue line, till it gets above both the 10 EMA and the 20 EMA. And then obviously, as I repeated over and over again, these moving averages need to be curling up. Then that might get me interested into this stock. Now, would I automatically take it? Absolutely not. I would have to look at price action. I would have to look at what the chart looks like. I often will, you know, consult with what the market profile TPO charts are looking at. And then we collaborate in the room. And then that's a big plus for us. Because we're working as a team to make sure that members are not just buying the dip for the sake of buying the dip and blowing up their accounts. So, all right, I said I was going to keep this short, so I'm going to keep this short. Everyone take care. Good luck trading today. Be safe and make sure you guys are using stops. Thank you.